Wall Street and Washington all abuzz about the currency move in China. So why is a stronger yuan such a big deal? Will it be good or a bad thing for the U.S. and the global economy too? So to help us answer these questions, we called in one of Bloomberg's best. Nick Bennenbroek is head of currency strategy at Wells Fargo Bank. The firm has a best overall currency forecaster ranking over the last 6 quarters. Nick, welcome to you.
Good afternoon.
Why is this being made such a big deal out of, this currency move by China?
Well, it is a very big deal in the sense that the Chinese currency has been rock steady for the better part of probably 12 to 18 months now, and it's really only happened once before, back in July 2005, and now here in 2010. So this doesn't happen very often.
But explain this to me. This is just a statement from the People's Bank of China. There's actually not been formal action yet, correct? I mean, is the yuan stronger today than it was last Friday?
It is stronger today than it was last Friday. The way that the mechanics of the Chinese currency work is that the central bank sets a reference rate every single day, and then the renminbi is allowed to move plus or minus 0.5% around that. Now, the rate they set today was exactly the same as Friday, but the market sort of latching onto the comments from the central bank actually saw the currency increase 0.4% today.
So why aren't markets a little more skeptical, given that we've got this G20 meeting right around the corner? I mean, this has got to be very much a political move too by China.
Well, I think that's, obviously part of it. We feel that the economic conditions have been in place for a little while now in terms of strong growth, rising inflation, that we could have seen a policy move at any time. Then it's really just a case of looking for an appropriate event or timing around which this could occur. There were the Chinese talks, China-US talks in late May. There was, for example, the G20 Central Bankers and Finance Ministers meeting. So, I wouldn't say the timing is not a coincidental. It was going to occur at some time, and the proximity of that meeting probably has something to do with it.
And then even the PBOC is saying that, and here's the quote, the basis for large-scale appreciation of the RMB or yuan exchange rate does not exist. So why not more elbow room? And again, since this is just a very slight appreciation for the yuan, is it going to really have a significant impact? Well,
we don't know yet, and that's the interesting question. We wouldn't expect, for example, a big bang. The last time we got, in July, for example, we got a 2% move. We're not going to see that this time around. But before the crisis, for example, the Chinese currency at one point was appreciating up to 8 to 10% per year. Now, we don't know if we're going to get quite to that speed, but for example, our own forecast, we're looking at about a 4.5% gain in the Chinese currency over the next year.
So from the Chinese perspective first, I know you're not an economist, but just in terms of China, this rapid fire growth has been so much attributable to its export economy. Can China now evolve, do you think, into more of a consumer-driven economy?
Well, I think that's part of the ongoing process, and a stronger exchange rate will probably shift some of that growth from the export sector into the domestic sector as well. But there's good and bad in this, I think, for China in terms of that export performance. Sure, the currency being stronger is going to make it a little tougher for some of those exporters in China, but in terms of China also being, a full international player and meeting, well, not exactly meeting its obligations, but doing sort of perhaps what's right by its international partners, for example, that's certainly going to help it to maintain access to all of these very important export markets, for example. So I think that's part of the decision process as well.
And then here in the U.S., the no-brainer is this is going to be great for all of these U.S. companies that do business and generate revenue in China, because when they repatriate back to the dollar, they're going to have higher revenues, correct?
Right. Well, and that's another very interesting question. It's actually interesting when you look at both the sensitivity of the U.S. trade balance to the U.S. dollar, really doesn't necessarily have a huge impact. And even looking at the Chinese currency, for example, when it was appreciating between 2007, 2008, for example, the Chinese currency was getting stronger. China's trade surplus was actually increasing at the time. So again, I don't know if the direct economic impact is going to be huge. I think what's important here is that this is going to allow stability and ensure access of China to all these important export markets that it currently has.
Will a stronger yuan limit China's purchase of U.S. Treasuries?
Probably at the margin, and we did see, for example, the Treasury yields moved about 6, 7, 8 basis points higher today. But I think it's not going to be a rapid rise in yields, for example, and there's a lot of other stuff going on. Let's take Europe, for example. There's less demand for European bonds right now, and we're seeing, I think, that shift in demand perhaps is going to support Treasuries, even if China's not there buying quite as many.
Do you think that we'll see the yuan be allowed to appreciate even from here? Like, where do we go next?
Well, initially we think it's going to be quite gradual, and indeed we think the relatively limited details that we've seen is not unintentional, and we're just going to have to watch over time to see where we go. But I would say over the next 6 months we're probably going to see a 1.5 to 2% gain. Then over the next year, maybe around about 4.5%, and then eventually we'll probably get into a stronger rate of increase.
Meanwhile, Nick, we always talk euro with you too. It's hovering around 123. Is it getting some stabilization there? Do you think it's still vulnerable because of the debt crisis?
I would say it's still vulnerable, not necessarily so much to do with the debt crisis right now, in the sense that I think we're at least starting to get to the end game in terms of some of the proposals that have been put in place. So we have seen relative stability there. There are some issues on the agenda this week, though. Some survey numbers out of Germany and out of Europe could be a problem, and also the G20 meeting that you've already mentioned. So we think actually it's going to be more challenging, and indeed our forecast over the next 12 months, the euro sort of in the 110 to 115 range.
Nick Bennenbroek is the head of currency strategy with Wells Fargo Bank. Always a pleasure to see you. Thanks so much.
Thank you.